A lot of what I'm going to talk about is around the business cycle to start with. And the business cycle is something, again, many of you should learn. If you don't know about it, this is how the macro guys invest. It's using the ups and downs of the economy to help us predict asset price movements. There's a whole module in the Real Vision Academy that's in the Real Vision Plus tier, where I talk through how I do it with my partner, Julian Bittel. Andreas Stanley Larson's part of that course. But that whole Real Vision Academy course has got tons of learning for you to teach you from step one, how to be a better investor, how to manage risk, how to find research trade ideas, how to think about sizing positions, all the things you need to know. Anyway, this is not a sales pitch. I'm trying to do this to help you because I want as many of you to succeed in these coming years. And I can see online there's a lot of confusion. So let me lay out how I see the world. Now, I am fallible. I can get things wrong. But I've got a high conviction that the next year or two will play out, broadly speaking, how I see it. So let's dig in. I'm just going to share my presentation with you so we can start talking through it. Firstly, my macro outlook always requires a business cycle framework because that's really what gives us the juice in the trade. And I'll come on to the secular trends later because they're important too. But the business cycle is really the ups and downs of the economy. So firstly, let's deal with where we are today. Today, the present day, here's the business cycle dominoes that help us understand that present day is where the ISM is today, which is below 50. So we're in weak territory, but not super weak. I thought we'd get a recession. I thought it'd be a mild recession like 1990. I still think we may get a recession. We may skirt it. Doesn't really matter because as this chart shows, in that kind of gold box, risk assets are way ahead of ISM. They live in the future. My work with Julian Bittel at GMI and also for Real Vision Pro Macro, well, we live in the financial conditions index mainly, which is 8 to 10 months ahead, which is why we managed to call the turn so well. And we have stuff like the China credit impulse that lies much further ahead, or also the ISM survey itself. We'll come on to that. You don't need to worry about it yet.
Hey, crypto explorers. Welcome back to Crypto Street, where we break down the Bitcoin arena for a shout out like no other. Hit that subscribe button, buckle up, and let's talk the ETFs. Will they spark a bull run, or are we heading for a crypto bust? Let's break it down. Spot Bitcoin ETFs. The approval is looming. Everyone's throwing predictions for Bitcoin's 2024 fate. Bullish whispers fill the air, but hold on tight. The bears have their say too. It's a roller coaster of emotions in the crypto carnival. We've got Ben Hunt, the chief investing officer at Second Foundation. He's not singing the Bitcoin anthem. Instead, he's strumming the concerns on X, according to Hunt. These ETFs strip Bitcoin of its OG anonymity. It's like taking the mask off a superhero. Is Bitcoin losing its mojo, or can it still dance in the shadows? In the other corner, we've got Arthur Hayes, a heavyweight in crypto circles. He's sounding the alarm on an existential threat. Imagine this, traditional asset managers wielding Bitcoin through ETFs like a powerful sword. If they hoard too much, we might be facing a Bitcoin apocalypse. It's a gain for Bitcoin's win, folks. Breaking news, BlackRock, NASDAQ, and the SEC had a secret meetup discussing spot Bitcoin ETFs. Is this the recipe for a crypto explosion? Some say yes, and the market seems to agree. Since early November, BTC's been on a rally. Insiders are placing their bets on a 2024 ETF approval. The excitement is palpable, my friends. Spot crypto ETF approval in 2024. If the SEC gives the nod, brace yourselves for institutional adoption skyrocketing. BTC's dance floor will be lit, and we could see a 4.9% boost, hitting $44,370. Is Bitcoin the comeback king of 2024? The crystal ball is still a bit hazy. Now, let's continue our discussion with Raoul Powell.
This year has been a flagship year, and I've been telling you a lot of the things that I saw back in 2022. I thought liquidity was going to bottom. I thought the business cycle was going to keep going lower, but the liquidity bottoming was going to lead risk assets, particularly growth assets, crypto and technology, higher. Those were my core bets this year, and those bets have paid off spectacularly. At time of speaking, the NASDAQ, we've been long technology all year, is up 50%. The exponential age basket, which is specially selected in GMI, and also Real Vision Pro Macro, where a lot of the GMI stuff also appears, well, that is up 75, 78% so far this year. And crypto, that's been a stunning year as well. I've been long crypto. I made the switch, bought Solana into the sell-off last year, and switched my ETH this year, and Solana's up 650%. So it's been a great year, but I think this is just the prequel of what's to come. You see, there's a lot to come going forwards, and that's why if you're not a subscriber to some of these research services and you want to get my detailed view, I think these are really important times to come, and the opportunity is going to be massive. So keep your eye open for that. Obviously, Real Vision itself, I appear there frequently. You get a lot of my content there as well. But I really do want to keep you guys up to date. I try and give as much away as free as possible to help as many people as possible, but also I have the main products as well. The central banks, well, they live in the past. Data they're still looking at is lagging. And so they lag by 6 to 8 months, which is why they're still at peak tightening while the economy is at a trough and risk assets are rising. This will all make sense to you shortly, so let me keep going. So, many assets just follow the business cycle. I've got here the Russell 2000. That lives in ISM today. This weak economy is why we've got a weak Russell 2000. The Nasdaq lives in the future, which is why it's strong. There's no weirdness about the dichotomy between these cyclical companies and the secular trending ones. They always have this time lag. It's not some broken structure of the market or this is a bubble, that's a bubble. It's just normal. It's normal that the Russell 2000 lives in present day ISM. It's cyclical. So that's where that is. Crude oil. Same. Crude has been weak because the economy's been weak. Crude oil doesn't forward look the economy. What it does is it reflects the present state of the economy. Another way of seeing the economy as it is today is this chart, the number of states with decreasing coincident activity. Say, number of states with bad economic data. That's very high. It's kind of in recession territories. When it crosses this 26 level, we're usually in a recession. Do we get a proper recession or not? Doesn't really matter, because a lot of that was priced in last year to the assets I care about, the forward-looking assets of crypto and tech, which I'll talk more about. But those of you who are small cap investors, emerging market investors, commodity investors, yeah, well, you're still at peak pain point, but it too shall pass. Next year, this is the bit that matters for everybody, particularly those of you who don't follow my exponential age thesis or my crypto thesis. And that's okay too, although I don't quite know why you're watching this channel, because that's what I talk about. But anyway, just so you understand, next year, well, here we start to see the economic indicators picking up. So the Empire and Philly Fed, the average of those is already showing an uptick. They're crossing that kind of zero level to say, hey, growth is about to come back. The ISM news orders minus inventories, this is a classic business cycle indicator, probably the most classic. It gives you a 3-month lead on ISM and it's screaming higher. It's telling us that the ISM is going to recover pretty sharply. And those recession fears, whether we get one or not, will be in the rearview mirror. Things will be getting stronger going forwards. And I know the last 18 months has been tough for many. Your portfolios and everything you owned got nuked in 2022. It's taken people's confidence away. I get it. Also, people have lost jobs. People's revenues have come down. It's not easy. But what I can tell you is 2024 is going to bring new sparks. The transition from macro spring into macro summer will take us from 2024 into 2025.
On December 23, 2023, Bitcoin's mining difficulty soared to a record level at block height 822,528. The difficulty surged by 6.98%, marking the most substantial escalation in 9 months since March 23. This increment set a new precedent, making the discovery of block rewards more arduous than ever, with a difficulty hitting an unprecedented 72.01 trillion. The Epic Games Store, the digital distribution storefront owned by Epic Games, has made changes that will allow some blockchain games to be listed on its platform again. Epic Games has announced that it will now admit games rated as adults only due to having non-fungible tokens, NFT, and blockchain elements. That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.